morning, good afternoon, good evening. My name is Jaden Doye, the traveling CPA. And here at Prestige Accounting Solutions, we help firm owners become more profitable and pay less to the IRS. Today's video is about how to write off your vehicle expenses. Now, keep in mind, anything said here today is not technically tax advice. This is only for education purposes only. Please consult any strategy discussed in this video with your tax advisor. All right, so let's get right into it, shall we? So let's first start with what are vehicle expenses and how do they work? Business owners oftentimes have to juggle a lot of expenses, and one of those biggest categories sometimes can be vehicle expenses. Vehicle expenses can include things such as gas, insurance, repairs, and maintenance. They also include the cost of leasing or financing a vehicle. When it comes to taxes, business owners can deduct certain vehicle expenses from their taxes. The amount that can be deducted depends on how the vehicle is used and what kind of expenses incurred. For example, if a vehicle is used primarily for business purposes, and then the entire cost of the vehicle can be deducted. However, if the vehicle is used for personal travel, then only a portion of the expenses can be deducted. Business owners should talk to their accountants to ensure that they are taking all the correct deductions on their vehicle expenses. Let's talk about how to calculate those expenses. The first step is to calculate your total mileage driven for the year. Then you'll need to determine what percentage of that mileage was used for business purposes. Once you have that figure, you can apply it to your total vehicle expenses. This will give you the amount that you can deduct on your taxes. By keeping track of your vehicle expenses, you can save money on your taxes and ensure you're correctly calculating your deduction. What can you write off on your taxes as vehicle expenses? Instead of using the standard mileage deduction, you also have the option to take actual costs. So these costs include gas, oil, repairs, and maintenance. Also insurance. Now, how to keep track of these expenses. So there's a number of different apps and softwares that you can use to keep track, such as QuickBooks Online, IQ, everlance, and TripLog. So as long as you're keeping accurate records, you should be able to take advantage of all the available deductions for your vehicle expenses. How to keep track of your vehicle expenses throughout the year. I'm going to give you four different steps. First, you want to make sure that you keep a logbook in your car. This can be used to track mileage, gas, and expenses and repairs. Use a personal finance app to track your vehicle expenses. This can be helpful if you have multiple vehicles or you use your vehicle for both personal and business purposes. Save all receipts related to your vehicle expenses. This includes receipts for gas, oil changes, repairs, and insurance premiums. Use a spreadsheet or accounting software to track your monthly vehicle expenses. This can be helpful for identifying patterns or trends over time. By following these tips, you can ensure that you're accurately tracking your vehicle expenses throughout the year. This will help you save time and money in the long run. Now, you can either deduct your actual vehicle expenses or you can do standard mileage deductions. You have a decision to make. Throughout this video, I mainly focused on actual expenses because with the new tax law, actually, a lot of people are seeing that it makes more sense to take actual versus the standard mileage deduction. And so let's talk about that. What in the new tax law is actually causing taxpayers to do that? Well, if you have a business vehicle that's over 6,000 pounds, you can possibly fully depreciate that vehicle in the year of purchase. So historically, you would have to depreciate a vehicle over a number of years. So for example, let's say you have a $50,000 vehicle and you have to depreciate it over 5 years based off of the IRS code. That means you would only get an expense of $10,000 a year as depreciation expense. While under the Tax Jobs and Cuts Act, you can now actually depreciate that full $50,000 in the year of purchase. So if you have a net income of $100,000 in your business, then this $50,000 tax deduction would definitely it may be very advantageous for you. It may be something that you want to talk with your tax advisor about. On the other hand, if you have a low mileage car and relatively few expenses on the vehicle, the standard deduction might actually give you a higher deduction. And with this, all you do is you take the IRS rate for that year and multiply it by the IRS. I'm sorry, you take the IRS rate for mileage that year. So let's say it's 57 cents, and you multiply it by the amount of business miles driven. So if you had 1,000 business miles and you multiply that by 57 cents, you can do the math and figure out what your standard mileage deduction would be. Now, keep in mind, you can't switch back and forth every year based off of what's more favorable for you. So it's important to do planning from the beginning, from the first year that you put a vehicle on your taxes. In the event of the audit, in the event of an audit, you wouldn't want the IRS disallowing some of your expenses because you did not do things appropriately. Thank you so much for your attention today. And if you saw this video and you thought, man, I really need a new CPA because my CPA does not give me information like this, and I have a lot of vehicle expenses, then give our office a call and let's see if we're a good fit. You can reach us at 833-672-2268, and a member of our team will be more than happy to help you.